This morning, Credit Suisse shares were halted multiple times in London, going to the downside volatility after the Saudi National Bank, its largest investor, by the way, said it can't provide any further financial backstop for CS. Garrett, are we on the cusp of a European banking contagion?
We are always on the brink of a European contagion. If you know anything about how finance operates in Europe, it is just more insane than what we do here in the States. You just look at what happened in 08, and then you look at 11, and then you look at the big pivot by the central bank over there in 2014 that kind of caused a lot of this challenges. 2020. This is the thing that kind of like lingers in the background, and it's always there, and you just don't want to look at it. Everybody continues to say things like, oh, Credit Suisse is not on the brink. That was an argument by Bloomberg back in October during the UK crisis. And the reality is these banks are always under a lot of duress. And whether it's Credit Suisse or SocGen or, again, the Italian banks, or you look at a major name like Deutsche Bank. The worst case scenario for Credit Suisse, they're not going to let it fail. They'll probably, in the worst case, merge it with UBS. But again, it is enough for us to constantly be on edge. And this is one of the things that when we say we go to cash or we move to momentum, which is last week, I thought it had to do more with just the Federal Reserve here in the United States. And the reality is it is a global concern around the financial system.
Again, it's round two, like you said, Garrett. Is there a crash coming possibly today in the market?
I don't think you're going to see a crash. I think it's very, very difficult in this environment, particularly with the zero date focus so heavily ingrained in us right now, that a lot of people have been taught to buy the dip at all costs. And you saw with a lot of the community banks, people were stepping in, buying banks at extraordinarily low levels, kind of buying the dip. CUBI was a perfect example of that, which went to 6 2 days ago, and then it was back at 20 within 24 hours. So people are going to bet that the Fed is going to either pivot, or they're going to provide emergency liquidity, or the central bank will step in Europe and provide capital as much as they can, similar to what happened with the UK crisis. That's what we've been conditioned to do, is just to continuously bet that there will be bailouts and that there will be support from the financial system, because again, they can't let it go. They can't let it fail. This is just the process over and over and over again. It's been like this for a long time, but it has really accelerated in the wake of the dot-com bubble. I think we're on financial crisis number 7 of my adulthood. That's good. That's a great way to live.
Oh, man. And Garrett, two-shot Todd. Two-shot Todd in the chat, singing the tune, bond yields are falling fast, and we are seeing more action this morning, and it's OPEC's option expiration this week. So there's a lot more volatility